We are here on this amazing day. Okay everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay everyone, we are marking up the BMW pair. For you car buyers and car lovers of BMW, here we go. And all you traders and stock holders for BMW, here we go. Alright, so let's take a look at what's going on in the market. Start off with some market structure. So back in August of 07, the market has started off. From there, it actually went right into an area of resistance. We see this doji, so the market got indecisive of pushing up, and it went right down. So once the market went down, it went to an area of support. I see a formation pattern and a retest and the push-up, so I'm going to demonstrate. That first line I put is the first leg of the double bottom. This will be the second leg of the double bottom. This will be the third leg of the double bottom, and this will be the fourth leg of double bottom. It's slanted sideways, but this is will be a double bottom, and after the double bottom, we'll be looking for a retest, and the retest is this doji candle right here, and then the market push up. So after double bottoms, we're looking for the market to push up, and that's exactly what the market did. The market pushed up after the support. After the retest, the market pushed up, broke the resistance, went into new areas of higher highs right here. The market wasn't able to break. It went back down to previous areas of support. It played around in this area before it pushed up. I see another pattern, so I'm going to demonstrate what I see. I see a double bottom. So when we are in these uptrends, we will be running into these double bottoms. And when we're on downtrends, we run into double tops or single tops. For example, this is the first leg of the double bottom. This is the second leg. That's the third leg. And this is the fourth leg. That red doji candle right here is the retest candle. So once the market retest, we most likely, after the retest, most of the time the market pushes right up. This time it didn't happen. The market came right back down and almost lined up with previous areas of support, but actually went to another area of support. It looked like it did what it did here with that double bottom. And then the market pushed right up to resistance. It did something here again, and then the market broke the resistance to come back down to retest the resistance, not once but twice. After it did it twice, it created enough momentum right here with this doji, these two doji candles, three doji candles, and the market pushed all the way up to new areas of higher highs. I see a pattern right here, and what the pattern I see is an engulfing pattern. An engulfing pattern is this red candle engulfs this green candle. So the red one's the bearish and the green one's the bullish. Once the bearish engulfs the bullish, there's a chance that the market can drop, and that's what happened. The market dropped after it reached areas of resistance. And what also shows that the market's probably going to drop is we see this long wick at the top. When we see these long wicks, I mean the market is losing momentum. It may lose momentum, and then once you see the engulfing pattern and closes out below it, that shows, okay, you know what, the market's going to shoot down. That's exactly what it did. So when the market pushed down, it went back to area support, came back to retest previous areas of second level higher highs to come right back down to the support, bounce around in here almost like a range for a little while. So once it bounced up and down, so you'd have been buying here, you'd have been selling here, you would have been buying here, and we would have sold. So we would have seen this pattern, this engulfing pattern. The red engulfed the green one, the bearish engulfed the bulls, and that's also create a pattern too. So let me demonstrate that pattern that I see. So this is the opposite of the double bottom, which is the double top, and I'm gonna demonstrate what I see. This would be, it's actually a trip. Look like there's a couple of touches in here, this area here before this push down. There's about 3 touches, or 2, maybe 3. So this is like 1, the market came down, 2, market came back down, 3, market dropped fully. So once that market, and once the red candle engulfed the green one, that showed that, okay, the market's going to drop. And also you can see that the market's going to drop because it didn't just retest on this time frame. It shows that in this area right here, it retested 3 times, but truthfully it retested more than that. Once the market went into this area, it retested once, twice, maybe 3 times, 4 times, 5 times. So the market wasn't able to break to areas of high highs. So that's enough information to show you that, okay, what the market may come down. And what also shows that the market is going to come down is this wick right here. This long, it's not like a very long wick like this here, but it's pretty, it's long. So once you see this, you don't see other wicks going on. You see a wick here, you see a wick here. So that means that the market may consolidate itself, which it kind of did for a day or two, and then, or I should say a month or two, and then we got that complete drop to new areas of lower lows, and then the market pushed back up. So there's something going on in here. There's also probably a pattern in here or something going on in here. So I see a formation, the market pushed up, the retest. So it looked like it tried to do a W here, double bottom. The retest came, it was going to try to push up to new areas, but this red candle engulfed not just this green candle, but it was strong enough to engulf it came right after the doji, engulfed the green one and also the previous green one, and then once it closed out, it showed, okay, you know what, the market is strong enough for it to push down, exactly what it did. So the market returned back to previous areas of lower lows. Now the market's trying to work its way back up because we are in a uptrend. So that's market structure for us. So we have identified what the market is doing. It didn't go back down to first level lower lows. It is actually at another level of lows, or on the way down. It's down on the way going up. So lower lows, looking for the market to rise. I'm going to erase our SR lines. We will be heading over to price action, and we can take a look at what's going on. So with the price action, we are looking for our trend line. We can grab this wick, take our trend line up to our higher highs, or where we think market may want to go to is here. And if it breaks out there, go to the next level here and there. So let's look for our SR lines. The way we do that, we go to price action. Look over to the left and see what it's trying to break. It's trying to break this peak here. We can drop a SR line there. If price breaks this SR line, what's the next level up? Will be this peak area here. If price, so there's also something else going on in here, right here. So there's a hidden area, which is another peak, and another peak is right here. Okay, I really don't like going too many levels up. I just like 3 SR lines. I'm gonna erase the top one because I didn't see that one hidden right at the moment. Now I do. Go back to price action, look for one more SR line, and we're looking to find some type of peak or inverted peak. And I found a inverted peak here, and I found a peak here, and a peak here, and a peak here. So this area definitely does get respected very well for our SR lines. It actually can be tied up. It can go up a little higher because this area here shows that this can be the next area if it goes back. Let's take a look at down the time frame. We are going to do a top-down analysis and looking for more peaks inside of our SR lines. So what price action is, we can't really work with nothing to add our SR lines here because there's nothing in this area. We have to slide all the way over to the left, and we got to play around with this area to see if we can create some SR lines and things like that in between in our top-down analysis. So for example, we are going to look for SR lines within the red zones, red SR lines. There's a peak here. There's a inverted peak here, in which you see is getting respected here as well. Also, there's another peak here, which get respected all the way through and through. And there's one more, looks like it's about right here. So it's possibly something going on right here. Okay, so we had create our SR lines on the time frame. So now if we go over to back to price action, now we can see what is going on, what his price is trying to do, where his price is trying to go. We're creating our SR lines. What we trade is the break and retest. I'm going to demonstrate that real quick. So for example, we see our SR lines. If we, let's say if we was at the bottom of, let's say this is the lowest low here and price is moving up, what we trade is this would be price. Price will break the SR line. So once you get here, you wouldn't take entry or be looking for entry. You'll wait for price to break our first SR line, and then we'll wait till the market to go back to our SR line. We'll look for entry here to see if it's going to go up, and we take it to our next TP. Once we take it to our next TP, we do not take entry. We wait for it completely break out to come back down to retest. We start looking for entry, then we take it to the upside if it goes up. Remember, you're always going to stay with the overall trend. If the overall trend is up, we are looking for buys only. You're not going against the grain to go for sales, no matter how it looks. If you're experienced, that's another story, but if you're not, just stick to the script. Once again, when price levels at this SR line, don't look for entry just yet. Just wait for it to completely breaks out. So let's say if it breaks out and it goes to the next level and breaks out that, always wait for the retest. The retest can happen here, and this will we look for entry to take it up to the next level, and so on. Okay, so let's go back to price action and see what's going on. So we can see that what price action actually did was, in this area, okay, so it was something down here that drew price all the way up to the high highs. I don't see no type of formation. This just looks all over the place in here. If I can match up these lines, I probably can draw up something. For example, I'm going to start here because the market pushed up. This will be the first line, second, third, fourth. Formation, a double bottom, and here go the retest that happened right here at these two wicks, and the market pushed all the way back up. So you can always find out what's going on in the market by just looking at it. So we know that the market has been pushed up after a double bottom and created enough momentum. So once we see, most of the time, once we see a push up after the double bottom, market will go to higher highs and probably lose momentum, and that's exactly what we see here. The second to last candle pushed up. We see all this wick. Market made it all the way up here, but it didn't close out until here. Okay, then the next candle formed, and we're trying to see what it's going to do. It actually broke above, so the market looked like it is going up. Could be consolidating, not sure. So for right now, we're going to grab the highest high, and let's grab, let's say, the bottom of this last active candle, even if it's a wick of the body, just to leave it there, because whatever's going on is going to identify itself in the lower time frame. So let's take a closer look and see if we can identify it. We don't see anything on the weekly time frame. So we're going to head down and see if we see anything clearer. Okay, so from what I see, I'm going to draw it out first. Market's at lowest low here. The push-up came. It came back to retest. And let me clear that up a little bit. Market came up, lower lows, came back to retest. This areas of higher highs, looking for price to break this. So once price breaks through, we wait for it to come back down. We look for the trade, for entry, and then take it to the next level. And it went all the way up to new areas of highest highs, broke the support. 1, 2, and now it's at the top, came back down, and now we got to figure out what's going on. So that market came up a little bit and it just stopped. So what it could be forming, as we are in the uptrend, it could be a double bottom. So let's say this is the first leg, that's the second leg. The market come down for that third leg right here, and it can shoot up for the fourth leg. I don't know how far it's going to go. We will see it when we see the move, but it can do something like that. And once we get that formation, that double bottom, the retest will happen, and the market can push up to new areas of higher highs eventually. Okay, so we looking for some type of pattern. That don't mean that's going to happen. The market can push up like it did, create that first leg, create that second leg, it can create that third leg, and then it can create that fourth leg. It can do a slight retest, and the market can drop. And that's the double top with the retest that shows that the market is going to drop. Or the market could turn into an extra leg, create a quadruple top, a quadruple bottom, and went up. So at the end of the day, what we have to do is just wait for the market to reveal itself in this area. If I had to tighten up my rectangle, it would look something like this. Just get it nice and close. You don't want to get it too far up on it, so whatever's going to happen is going to reveal itself. Once you see once the market reveals itself, we'll take the trade. For us to figure out the pattern, what it's going to do, we have to go to Google. We would type in Forex pattern cheat sheets. That's Forex pattern cheat sheets, and we'll go to images, and we will watch and we'll look at all the images to memorize what's going on with the patterns. You don't have to memorize the names, just memorize what you see, and as long as you stick with that and just wait for the market to reveal itself, the trade is golden. So let's say this is not a official trade, just playing around with it, just show you guys some numbers. If we look for price action and we drop a long position on it, and we see, let's say the pattern happened here, and it's confirmed, let's say the pattern happened, and we're ready to take entry, we can take it to the next SR line, which will be here. We'll go to lower time frame to tighten up our stop loss. Probably get the bottom of that. This is an amazing trade too. So this is BMW. For the take profit will be 203 pips, which is an amazing trade. If the market goes back for our stop loss and takes us out, it'll take us out for 53 pips for the low, which is still an amazing move. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.